Bitcoin 2022 came out of nowhere and has become the de facto global gathering of Bitcoin, the granddaddy digital asset. This year, it's going to run for 3 days. It's taken over the entire convention center in Miami where I live. That's a big facility. But what's remarkable Yeah, for as tragic as the Russia-Ukraine situation is, and as far as markets and investing go, I don't put much weight on it. I'll explain why. That represents less than 1% of the S&P earnings, no matter how you triangulate it. Obviously, these sanctions are unprecedented in economic pressure. And the fact that the Swiss actually shut down Russian accounts is also unprecedented. Now, as far as crypto goes, and Roy and I are obviously focused on that, I don't think that matters as much as this, what I call 4 vectors of policy coming at crypto right now. Let me walk just through the shopping list. So this is also unprecedented. Number 1, you got the Loomis bill, and it's mostly positive. I've read it. A lot of positive policy in that. Number 2, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number 3, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number 4, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class. The trend is your friend, and as far as Bitcoin's concerned, I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stablecoins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stablecoins. And so that's interesting, because the fact is, today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. On the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be Hut 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while, but that's why I talk about the 4 vectors. That correlation is going to fall off pretty quickly now that we have for the first time calls for carbon audits, because most of the public companies in the US that have been used for proxies have been saying, okay, we'll just buy some carbon offsets. And that worked fine. But now that the SEC wants to audit this, you can't find an auditor that's willing to sign off on that ledger, because you can't say I'm using, dirty energy to mine coin, and I bought, an acre of the Amazon forest and try and pass them off. It doesn't work. There's no way to audit carbon credits. So we are in a bit of let's call it a bit of a pickle right now. And I'll be frank and transparent on this. I have dumped all those stocks as soon as I read the executive order out of Biden. I sold.
Wait, which stocks are those? The mining
specifically
stocks?
Yeah, specifically we owned Hut 8. We were indexing some of our my mandate. I can't own Bitcoin. I mean, I can own it personally, but if it's in an operating company, I can't do it because we don't have a regulation, a rule on that yet. And that's why most of it is actually held by high net worth and hedge funds like Roy's, where they don't have that compliance issue. I do have a compliance issue, but I am on board with him on the trend as your friend on pricing. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it. I see it as the #1 destination for institutions that are allowed to index it when they can index it. They would be picking up 1 to 3% weighting if they could. They tried to do it, as I mentioned earlier, using equities that mine Bitcoin, and that's in a bit of turmoil because of ESG mandates. But Bitcoin itself will provide enough liquidity for an institution. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. If you're an investor now, like I am, and clearly Roy is, we take our positions pre the stabilization of indexing by institutions. Why? We'll be rewarded for taking that position now. And when it happens, I don't know. Could be 6 months, 12 months, 18 months, 24 months, who knows? But when it happens, prices are going nowhere but up. So let's just dissect that. And because you've made a few statements there that are very important. Let's just talk about Ethereum 2.0. That has been on the calendar for over 2 years. And it's always just coming to a theater near you. And the reason it doesn't happen that quickly, and probably won't happen on schedule here, is not everybody within the ETH community agrees with this move. And there's a bunch of stakeholders that don't benefit from a move like this. Removing proof of work to proof of stake is not going to be to everybody's benefit. And so that fork in the road could be a bump, not just an upside. And so I don't know the answer to that. ETH remains the platform of the standard, if you wish, but at the end of the day, it doesn't mean it'll be successful. Let's go back to the comment regarding all of this policy around ESG. It is remarkable that you have both government policy and private policy dictated by the BlackRocks of the world and corporations making claims of carbon neutrality. Here's why I argue to investors and institutional investors why it's a good thing that there is proof of work. I'll walk you through it, all right? In America, 85% of the dams that were created in the last 150 years contemplated turbine power. However, 85% of them, the turbines were never installed. Now, whose economic interest would it be to go back and install those turbines to get access to 100% carbon neutral power? I'd argue that is going to be capital that would set up data centers and mine Bitcoin with 100% hydroelectricity. In fact, that has actually happened already. The capital that actually did that was sovereign wealth out of the Middle East in Norway. They've built out a facility on its way to 300 megawatts, and we'll see that. I think they're up at 40 already. They have been hashing coins since December. It's the new model. They call it the Norway model, 100% compliant. And the actual institutions are not allowed to own Bitcoin that actually funded that thing. They've been able to figure out a way to take the network awards that you can never allocate to where they came from. They could come from China, wherever, and actually remove them as what they call slag from the coin that was awarded. So what is sitting on the balance sheet of that company called BitZero, it's their first facility, but they're contemplating ones in upstate New York, Tennessee, Montana, and the amount of capital they're going to burn up doing this is hundreds of millions of dollars. But it's there from institutions that are taking their money out of the public stocks are going to get audited. So I'm arguing that Bitcoin mining is good for sustainability. It's good for longevity. It's good for productivity. And it's going to do something that's really important for America. It's going to put those turbines back in those dams because that's the #1 use. And then they'll let the communities use excess power when it's needed. I think this is a good thing. And this is going to be one of the big topics that you're going to hear about at Bitcoin 2022. In fact, there's multiple keynotes around this whole issue because of the squeeze happening right now on this ESG thing. And ESG has to be dealt with. The private sector, the public sector, the president, the Loomis, all of these bills, the SEC, they're coming down hard on carbon and carbon audits. And it's going to affect this industry in a really, I argue, positive way. Except if you're an existing Bitcoin miner that is using carbon credits, then you're screwed. The fact that you've got institutions funding it, and the reason I know this is I actually became an Emirati citizen 6 months ago, just so I could vest alongside them. And I'm very proud of that, but I own a piece of that Norway facility. And that is, for me, solves my problem. Nobody can give me an ESG audit. There's nothing to audit. I have no carbon. There's zero carbon there. So all of this noise that's coming at everybody about this is, I'm saying, what carbon? We're just using hydroelectricity and we're doing it on a sustainable model. And we're providing for the university in Norway access to high-speed computers. And on top of this, I mean, this you couldn't even dream of. When they built it, they put beside it a hydroponic stack for tomatoes and a canning plant, and they take the heat off the stacks and grow tomatoes. Talk about community. I mean, they don't want to lose that Bitcoin mine now. It's not one of these miners that rips into town, mines some coin, gets awards, and blows out. These guys have long-term power at under 4 cents a kilowatt hour. So the whole point is, that is the model. And I think that's what's going to solve this problem for POTUS's executive order, what Larry Fink wants to do, what the SEC is doing. But right now, as you pointed out, very few institutions are taking that. They're just staying away from it completely because they're saying ESG mandates too scary, carbon audits too scary, SEC too scary. You know, we don't want to lose BlackRock in terms of managing our funds, all of this stuff. And we're going to wait for the Loomis bill to come out. So, we're in the transition period. Roy pointed that out. But I bet you when we have this conversation, the two of us again in a year, it's going to be remarkably different. Bitcoin 2022 came out of nowhere and has become the de facto global gathering of Bitcoin, the granddaddy digital asset. This year, it's going to run for 3 days. It's taken over the entire convention center in Miami where I live. That's a big facility. But what's remarkable, the first day, the 6th, it's all institutions and it's totally sold out. That has never happened before. That'll be 1,500 to 2,000 institutions from all around the world there to listen to different thoughts about where we're going with this thing. I'll be doing a keynote exactly on this ESG issue because it's top of the mind for everybody. I'm going to lay out the data I've got and, we'll have that discussion, but it's institutions only. That is remarkable.